So this is the preview for the Bank of England's decision on July 14th, the first decision post-Brexit. So it happens at 11 GMT, 1 p.m. Here in the old continent, 12 in the UK. This time it's different. Why? Because the Bank of England hasn't changed interest rates since 2009, when it lowered the interest rate to 0.5% and never changed it ever since. Mark Carney is in his office, okay? Governor Carney, the Canadian leading the Bank of England, since 2013, he never changed policy. QE, currently the program stands at £375 billion. The last time it was changed was back in 2012. Again, Carney didn't change that either. This time is different. One big reason, Brexit. Lots of uncertainty. Already had an impact on financial markets, especially the pound. Weaker, lower bond yields. Stock exchanges have recovered, but there are signs that it's already hurting the UK economy. For example, these property funds I mentioned, I mean, if you invested in a property fund and want your money back, even with the loss, you can't get it. The money is frozen. Okay. Also, we heard anecdotal evidence of some orders being cancelled or not renewed, deals falling apart in the UK, or either between companies in the UK and in Europe or other places because of growing uncertainty. We have very few numbers. The only number that we've seen so far is the construction PMI, which crashed to the lowest level in 2009. Of course, the construction sector, the housing sector, helped the economy recover in the past few years, and now it could drag it back down. That's the main focus, property funds, as I mentioned. Okay, but we don't have enough figures of retail sales, for example. We don't have other updated PMIs, post-Brexit PMIs. The data was collected before Brexit. Okay, what the Bank of England does have is its regional offices across the country, and it has some anecdotal evidence. Bank of England, Mark Carney said that they will do some action in July and more in August. Why more in August? Because in August they have their quarterly inflation report, which is not only about inflation, it's about the economy in general. So they want to do some easing now and further stimulus when they'll have more data in August, their own quarterly inflation report, as well as other figures, okay? So what are we expecting from tomorrow, for tomorrow? Markets are expecting a cut of the interest rate for the first time since 2009 to 0.25%, okay? But it's certainly not a done deal, not fully priced in. We didn't get a specific hint about that. There's also a chance that they will not cut interest rates, okay? Leave it unchanged and wait for that until August, okay? That's one option. Another option is that they'll slash it to zero, matching the Eurozone interest rate and sort of showing us that the situation is really bad. That could really hurt the pound, okay? So the first move, I would say the initial move tomorrow will depend on the interest rate. Sort of markets are around a cut of 25 basis points, but we could have no change or interest rates slashed to the round zero number, okay? That'll be the first thing. The second thing they could do, I don't think both of them would happen, but at least one of them is adding more QE. Also, this has limitations because what will they do with QE? It's printing money to buy bonds. Bond yields, treasury bonds, government bonds in the UK already fell to lower ground, okay? So the yields. So how low can it really go? How much can this impact markets? But it's still something that would be appreciated. Of course, if they both cut rates and add QE, it'll be very negative for the pound. And of course, more importantly, they released their meeting minutes alongside the state decision itself. And there they could hint about more action for August, okay? I believe that the decisions taken tomorrow will be unanimous. We'll also have the voting pattern, but you never know. I guess if they go to one extreme, either doing very little or too much, we'll have dissenters, hawkish or dovish. But assuming it'll be somewhere in the middle, we will have a unanimous decision. But the meeting minutes are therefore more important for what they intend to do in August. Okay, so it's interest rates, QE, and hints of what they'll do in August. And basically the tone, how bad is the situation? If it's terrible, and they're doing much now and more in August, the pound will fall, despite the political certainty that we have now, relative political certainty. If they're in a more of a wait-and-see mode, okay, we have a new government, we're waiting, we'll probably do something in August, but nothing now, or a bit now, but probably not sure about August, depending on the figures, then we could see the pound rise. So anyway, I'm trying to tell you, this is one of the more complicated rate decisions. Anything can happen. Nothing is fully priced in. Currently, as I see it, my expectation is that because we had this quite a big rally in the pound, let's take another look at it now, following the political certainty. Okay, we're already off the highs, but I believe we'll have a swing of the pendulum to the other side. So first and foremost, the interest rate. Second in rank is the QE program, if it's enlarged from 375 billion pounds. And the longer term impact will come from hints about what they intend to do in August, and of course, how they see the UK economy. Again, my expectation is for Carney to drag it down because we went too far to the upside in recent days. Okay, so that's the preview in this context. Question from Luca. Do you have a view on stock breakout, QE, overdose climax? Not everyone is talking about a new secular bull market. Seems like a big second to me. Good morning, Ed. Okay, so that's a different topic. Anyway, yeah, QE has limitations, diminishing return.